Well, US markets continue to see strong selling on fears of a recession, but Australian markets have remained fairly resilient. So hi there everyone, welcome to the Traders Circle weekly market update. Today is Tuesday the 22nd of April 2025, and before I get started, you do need to be aware that whatever I say is general advice only, and you have to consider whether it's appropriate for yourself. So the big story at the moment obviously is the Trump tariffs, and specifically the tariffs on China. He basically put a lot of the other tariffs on pause to basically battle it out with China. He kind of had to pause those other tariffs. Markets were breaking, and he wouldn't have been able to go as hard on China if he hadn't have paused those other tariffs. But even so, even just the tariffs that he's levied on China, they're really sort of working to destroy the US economy, destroy the US share market, and basically trigger a bunch of selling. Things have been so bad that Trump has basically said that he's willing to make a deal. He's willing to unwind the tariffs, and he's basically wanting to walk back a lot of what he's placed on China, and he's pretty much been forced into that position. But he's also too proud to basically do it unilaterally, and he said, it's up to China to make the initial approach and then to make a deal. Now, Trump never made it clear that he wanted a deal. He basically said he was doing things to bring back manufacturing to the United States. But now that I think he's seen how negative the reaction has been, and how much selling and volatility and uncertainty the tariffs have caused, I think he's sort of pivoted towards saying, we'll make a trade deal, we'll get something good out of it. For their part, the Chinese haven't seemingly been that willing to come to the table and basically make the deal. In China, obviously, they face less political pressure, less financial pressure, less market pressure from their decisions than they do in the US. They can basically control the narrative in the news, control the narrative in the markets, and the public opinion polling doesn't matter too much. So they've been stubborn. They've basically said they're not going to do anything while they're disrespected. And so even though Trump is trying to save face and get the Chinese to come and make a deal, he might have to sort of pin his tail between his legs and make the first approach. But regardless, the longer that this deal takes to form, the longer these tariffs remain in place, the more likely we are to see US recession. In fact, it might be that enough damage has already been done that a recession is unavoidable. So to minimize damage, I think investors will be hoping for a deal as soon as possible, and hoping that the 90-day pause on the other reciprocal tariffs is never unpaused, basically. The other thing to talk about this week, and in fact perhaps a bit of a trigger for the selling overnight, was the Trump administration attacks on Fed Chair Jerome Powell. Many in the market love Jerome, myself not included. He's basically seen as a bit of a Jesus figure in markets, for share markets. And I think basically when Trump basically said he wanted to fire Jerome, they were going to look at ways to remove him. That really spooked investors because, Jerome has been one of the things basically pumping the market up for the past few years. He's been at times the money printer, at other times he's been the cooler of heads. He's basically been the one supporting the market throughout his entire tenure. In fact, you could say he's pretty much done everything he could to increase the value of shares listed on the market. And I don't think that's a exaggeration. So Trump threatening to get rid of him for not cutting interest rates is quite silly. Interest rates can't be cut into an environment where inflation is about to rise due to the tariffs. That would be ridiculous. So, I don't know what Trump basically wanted him to do, but things would be infinitely worse if he did cut interest rates. Things would be worse for Trump if he cut interest rates into this trade war, or during this trade war. If inflation starts spiraling out of control again, it's not going to, endear Trump to the people. So, I don't know what Trump wanted him to do. Regardless, I also don't think that Trump can remove Powell. It's probably a little bit of a dirty secret that the Federal Reserve is actually owned by the US private banks. So, yeah, I don't think the federal government can do anything about removing Jerome Powell, but we'll have to see the wash up on all of that. Ultimately, the government has a monopoly on violence, so we'll see how that craziness ends. Finally, I wanted to talk about the banks, Commonwealth Bank in particular, which closed at an all-time high today. That's despite the bearish conditions we've seen in share markets. That's despite, the US S&P 500 falling 16% from its high. It's despite our market down 10% from its peak. It's despite, bank earnings not growing for 3 years. It's despite a big sell-off on the bank reports in February. CBA over the past 9 days of straight rebounds has gone to a fresh all-time high. Obviously, it's been, the mother of all short squeezes. Today it was up 4.2%, a day after US markets fell 2.4%. There's no rhyme or reason to it other than, people who went short being squeezed out. Is CBA worth $168 per share? Certainly not. Does that mean that it's going to fall from here? Certainly not as well. In fact, I wouldn't be surprised to see it go further. What I would say, however, though, is that it won't go further forever. And now, I'm sure there's plenty of people out there who will say, well, people thought the same thing at 120 and 140 and 160, and it has gone further. That doesn't mean it's going to go further forever. The Western history is littered with examples of people assuming that overpriced stocks will remain overpriced forever, and always, without fail, they have come back down. So yeah, that is worth keeping in mind. It's a phenomenon that keeps repeating itself. So yeah, let's have a quick look at the charts for this week, guys. And we can see the resilience of the Australian market in this chart. We've actually broken our downtrend line that formed since the start of February. We probably found some resistance around 77.50. We broke through that resistance level, and then over the past few sessions, we've actually held it as support. So with a hold of this level as support, and with perhaps the stochastic pointing higher, I wouldn't be surprised to see a move towards 8,000. That was the peak in late March, and by the time we get there, that's also roughly where the 50-day moving average is going to sit. Now, if we contrast that to the US market, and this is the US S&P 500, they broke through that 5,000 point level. That's probably equivalent to our 77.50 level. They fell down to about 5,000, and then they've bounced back up, but they haven't quite gotten to their 5,500 level. They haven't quite gotten to their downtrend line, and they've actually resumed selling. They look more likely to head towards, the 5,000 point level than they do the downtrend or the resistance level. And that's why I'm saying our market is looking quite resilient in the face of US selling. And it could be simply that we're seeing people shift money out of the US. We're seeing people sell US shares, sell US bonds, sell other US assets, and buy assets in Australia, buy shares in Australia, buy other assets around the world as a way to reduce their risk to Trump, to reduce their exposure to the US, and to increase their exposure to now what seem like more stable countries. And on top, sort of illustrating that, we've also seen the Australian dollar rebound quite strongly against the US dollar over the past couple of weeks, where usually when markets sell down, we see the Australian dollar fall relative to the US dollar. So technically for the US market, to me, they look more likely to head to 5,000 than they do to resistance or the downtrend line. Although I will note that currently US futures are showing a little bit of a rebound tonight. Finally, I did want to bring up CBA. It closed at its highest ever level today. It's rallied for 9 days straight. Now, it's an incredible rally, unbelievable. And today's transactions have actually been pretty close to record volume on CBA as well. And keep in mind, this comes after, a extremely bearish US session, where usually you would see, CBA and our market fall. Very, very surprising, but it's obviously a short squeeze. Obviously, we've seen a lot of individuals, investors, probably a lot of institutions go short on CBA throughout late February and March. And over the past 9 days, as the share price has rallied very strongly, a lot of those shorts have closed out. And when they close out, that's them buying shares on the market. When you close a short, you have to buy it back, buy shares back on the market. Part of that will be why it's had so much volume today, why it's jumped 4.2% after a strongly bearish US session. I will remind people that the initial selling on CBA wasn't actually from the Trump silliness. It was actually from some pretty poor bank reporting from the major banks in the February reporting season. We saw the banking sector really hasn't increased earnings over the last 3 years, and yet at the same time the share prices are up sort of 50% or so. So the initial move was probably more fundamentally based around the banks themselves rather than the economy or the Trump silliness. So I will say we are about to approach another bank reporting season. That's going to come in about 2 weeks' time. The second week of May, we're going to see ANZ, NAB and Westpac report, and then the week after, we're going to see a quarterly update from CBA. Now, given that we have seen prices return to record levels, it's a record valuation as well, I will just say we could see some movement on these reports. It could be to the upside because no doubt plenty of people will short these banks into the reports. So if they are surprisingly good, wouldn't be surprised to see a pop higher. But just as similarly as they fell in February, if the reports again disappoint, there's an awful lot of room to the downside on these banks. So I will wrap it up there for this week, guys. Hopefully you guys enjoyed. If you did, click like, click subscribe, and we'll see you guys next time.